Um, Let me quickly introduce myself before we start. My name is Ziad, and I've been with Instabug for the past 5 years, helping a lot of companies, a lot of banks in specific, achieve their mobile goals and mobile strategy and quality. And today, basically, we'll be tackling mobile banking traditions, what's new, all the trends, and how you can leverage mobile performance for the mobile banking. Kicking this off with the agenda, we'll be walking on the history of traditional mobile banking first, history, main pillars, stakeholders, and then we'll run through some numbers regarding the mobile finance landscape in 2022 as we stand today. We'll go into the rise of fintechs since the beginning of the fintechs rise up till now, coast to mobile app performance, competition and competitive mobile first strategy for financial applications, and how we at Instabug we helped other financial service apps improve significantly when it comes to their mobile banking process. Starting by the traditional mobile banking, just a quick history on the evolution of mobile banking. It started in the 1990s, and it was basically defined to redefine the interactions between customers and banks. Three main pillars or stakeholders into this process: technology, customers, and regulators. For the technology, financial services traditionally was an industry that required a lot of fixed assets. For example, branches to scale. So in order for a bank to scale, they had to open multiple physical branches. And this started acting as a barrier for entry to new customers. So what technological advancements has done right now is that it allowed the upstarts to run complex operations virtually. So for example, neobanks operate purely on technological infrastructure. Another example, the UK-based Revolut has amassed like 1.5 million customers, of which 350,000 are active on a daily basis without any kind of live customer-facing function. So this says that everything that has to do with the history of mobile banking and fintechs is actually going to be done technologically. Second pillar is customers, and specifically to understand user behavior, customer behavior after the financial crisis in 2008 and various other scandals. Customers are demanding more and more from their banking services. Technology now is empowering customers to make sure they leverage on heavily more technology, make sure that they are receiving customer support in a more effective way, doing the transactions in a more effective way, and the better the process, the more sticky the customers are. Third pillar are the regulators. Increased regulatory oversight on banks post 2008 is estimated to cost like a huge amount of money, probably more than $70 billion a year. A bank like Citigroup, for example, alone employs like 30,000 employees within its compliance division. Aside from that, a lot of processes going back and forth. And this actually allowed the new startups, the fintechs, or not de facto banks that do not go through a lot of bureaucratic processes to step in and offer better and more compelling alternatives. How does the mobile finance landscape look like as of now, if you go into that? So actually, according to a report by McKinsey, during the first few months of COVID-19, the use of mobile banking channels increased from 20 to 50%, and it's predicted to remain this way even after the pandemic is over. If it says that 9 out of 10 of users prefer using digital platforms instead of visiting a bank, that says that 90% of the transactions are being done digitally right now, which puts a lot of significance on all the digital products inside the banks, whether it's a web portal, whether it's a mobile app, or so on and so forth. If we focus on the mobile apps, we can find that in 2021, there has been 5.9 billion finance apps downloads. This is a huge number when we compare this to any other category on the App Store or Google Play Store. And it makes sense actually when it comes to reflecting this on the global payment market, which was valued in 2021 with $1.7 trillion, and it's expected to rise in 2027 to $6 trillion, which is a huge significance. If we look at this deconstruction by generation, we can see that there's a difference between December 2020 and May 2021, and there is an increase in probably most of the generations. If we're speaking about seniors, baby boomers, Gen X, millennials, and Gen Z, there has been a significant increase in the usage of the mobile banking for those generations. And if we focus in specific on millennials and Gen Z, we will find from 83% to 91% increase, from 86 to 95. It might not look like a huge jump, but actually, if you look at it, 95% of Gen Z penetrated the mobile banking market. That says that 95% of this generation, almost 100% of that generation, will have the power to start having their transactions done online. So those two generations have a lot of influence on the transactional power right now. Both generations will have a lot of expectations regarding the mobile performances. For the sake of this, some of the banks that we actually started working with have went into the solution of acquiring new fintechs as their tech arms or as the new mobile banking strategies. A quick intro about the rise of the fintechs. Actually, on the old days, it was only the banks. Right now, there are new companies offering a first-class user experience, control over various aspects of money management, security, and user experience. We can tell that like modern fintech apps are setting a new standard for handling our personal finances. Thanks to a continued influx of new fintech technologies and challenges, the number and the quality of competing apps that continue to grow with time and increasingly redefine our relationship with money has really grown. With the rise of those fintech apps, teams in traditional finance and banking will soon have no choice but to rethink mobile development practices and adopt new technologies. We're having two teams right now: the old teams, the de facto banks, traditional ones; the new teams, the fintechs, and the new cooler ones. And actually, the user adoption and retention is going to be a huge game changer. How actually the fintechs do their thing? Like disruptive fintechs usually follow a similar trajectory. They enter the industry by either creating a new demand that's not there, for example, or by joining the already existing open ecosystem of traditional banks. Their monetization strategy is built on providing future forward competitive services with a digital edge, therefore increasing customer lifetime value. As a result, they're able to scale beyond their core market and expand their user base, often exponentially. Some of the very interesting numbers that we've seen when analyzing the performance of finance apps on the App Store and Google Play Store is that there is a very strong correlation between the age of the users and the ratings of the applications in that category. So the more recently a finance app was launched and the younger the company developing it, the higher ranking it achieves on the stores. Like in January 2022, 8 out of 10 the most downloaded finance apps in the US were developed by companies that were founded around 2010 or after. So in the era of mobile's expansion, in the App Store in particular, companies that were founded after the emergence of mobile release new versions, 30% more often and averaged 4.8 out of 5-star ratings, or full 20% higher than the average for the top 50 apps in that category. So one of the problems that have faced the traditional mobile banking and the banking sector is the frequency of the releases. A lot of banks that we've been speaking to, they say that we release every month, maybe every 6 weeks. Unlike the fintechs that release every 1 week or 2 weeks, they have a more frequent release cadence, which definitely pushes users to be on top of new releases, new technologies, better bug improvements and fixes, and make sure that those applications are ranking high on the store. There might be a number of underlying reasons for these findings. Either younger companies have a better grip on customer expectations, which is probably the case, or they rely less on outdated tools and infrastructure, which allows them to iterate and release faster in a more agile way. This is very interesting. We found when we were doing some research, the sources amplitude here is that digital transformation brings substantial benefits for the challenges of the finance and banking industry. Top fintechs have surpassed traditional banking apps in the user base growth, with breakout finance apps seeing the greatest yearly increase in downloads. According to this report, actually, the number of daily active users in the fintech apps has grown 337% from January 2020 to October 2021. For the coming years, all the analysts forecast future and further growth in the number of fintech apps and the range of services that they offer, especially in mobile payments, which is projected to reach a revenue of 4.6 trillion USD at the end of this year. So basically by 2025, from 10 to 40% of bank revenues will be done automatically from fintech competitors, will be happening through the newer generation of applications, and the traditional financial institutions will need to cope. How will that happen? That's the question. One of the deciding factors definitely in the bank's mobile success is its app's performance. And we will be tackling on why app performance is the thing that mobile banks will need to leverage in the coming few slides. So the question is acquisition or quality. So a lot of banks, they invest a lot of money on advertisements, a lot of money on acquisition, a lot of money on the marketing, and they think that we need to acquire more users to use the application, which actually happens. And then when the users start using the application, they use it for a few times, and then they stop using the application. They churn, they uninstall it, they start looking for another bank to join, especially if they're millennials, if they're Gen Z, and the application quality is a deciding factor. So what we found is actually the acquisition budgets need to be pushed into the quality budgets. One of the things that we've learned is that the app performance impacts App Store visibility and rankings. 1% lower stability can lead to 1-star drop in ratings. When we say stability, we refer here to the crashes. How frequent does the application crash? Usually there's the number of crash-free sessions, which defines, like, it's a KPI where all the engineering teams align on. 99-ish crash-free sessions is good. Less than 99, it starts lowering the percentage of the quality, hence drops the ratings. Stability is defined by your crash-free sessions. So the higher the number of crashes that you get, the higher drop in the ratings that you should expect. Another one that we found is a 2-star drop in ratings typically results in a 50% lower acquisition rate, which will double the acquisition cost. So most of the banks do not leverage or do not put a lot of effort in the application quality, and rather they double the acquisition costs. But actually, this is a trap that most of the banks fall in, and investing in marketing and user acquisition rather than investing in the quality of the application. And it turns out to be that users do not use the app because it's having a low rating on the store. Maybe they use it a couple of times and then they churn. Maybe it crashes a lot. Maybe there are a lot of performance metrics that they're not taking care of that causes this to happen. So basically, the equation that we reached when we started researching about this is that the performance and the retention will define the revenue growth. The performance of the app, customers now have a very little tolerance to the performance failures inside the financial apps. And by the way, for the banks, from the bank's perspective, not from the customer's perspective, bad performance means losing money if users are not able to run complex transactions, maybe network calls, APIs fail. This means that the bank is losing money on those transactions. Retention, to make sure that you're retaining the users and increasing their lifetime with you, will mean at the end of the day, the revenue growth, which is guaranteed to the bank. Competitive mobile first strategy for financial applications. How do we define that? We've been working here at Instabug with a huge amount of banks, a huge amount of fintechs to make sure that we're helping them with all the aspects of the mobile strategy. And the way we would love to deconstruct this is to deconstruct the aspects into 2 buckets, which at the end of the day, we focus on a customer-centric approach with revamping the perception of app quality. So 2 buckets. The first bucket that we call it the user feedback, and the second one is performance and stability. For the user feedback, there are 2 ways that you can interact with users. The first one is bug reporting, where the users have a mechanism inside the application to invoke something and tell you like, hey, there's a problem, we found an issue while trying to do certain thing, or maybe there's a feedback that they just need to share with you. So there's a way or there's a mechanism for users to reach out to you from inside the application. One of the most painful experiences that we found is the ability for the users to contact the engineering teams or the product teams or the customer support and tell them like, hey, there's an issue. They need to go through maybe an endless customer support calls, maybe a Google form that doesn't go anywhere, but from inside the application and responding back to them means that there is a 2-way communication channel open. Users are heard, their concerns are taken into consideration. Future iterations on the application is actually taking the feedback into consideration. And this is the first bucket. In-app surveys as well, in the same one, from a product management standpoint, you're releasing new versions, you're releasing new features, and you need to understand how users are perceiving those ones. You need to understand how loyal your users are by for example, measuring the NPS. You need to push satisfied ones on the stores to give you 5 out of 5 star ratings. So this is the communication or the user feedback bucket. The second one is the performance and stability, which goes hand in hand with the first one. You cannot guarantee a 5 out of 5 or 4.8 out of 5 App Store rating without having a stable application with monitoring every single thing that's happening internally. We can definitely divide this into multiple pillars, and those are the 6 pillars of performance that we'll be somehow covering today: testing, user feedback, monitoring, stability, security, and development. Starting with testing, what usually companies do, what usually mobile teams do, is that they never release their mobile application to production without going into various testing rounds. And we're not referring here to automatic testing, we're referring to the manual testing of the mobile application itself. So if there's a QA team, for example, testing the application, sharing the feedback with the engineering team, this what happens. There's a beta group that will be testing the application and catching any release blockers and passing this piece of feedback to the product teams or to the engineering teams. This is the second one. And the third one is if you go to production and you still need to collect the feedback, it's not testing this way, but it's still some sort of in-app communication. So what we do is that we try to get the cost or the time taken to raise an issue, like cut it with like 50% and make sure that you're reducing 70% of the errors that you'll see on production, but you see it internally instead of seeing that on production. This one explains a lot how we perceive in-app feedback or in-app quality. The internal testing, which is the very first small concentric circle, which defines the testing process between the QA team and the engineering team. As you go bigger and as you start having the need to get more testers, maybe those are beta testers that you recruit from crowdsourcing beta testing platforms, or maybe you're a huge bank, you have thousands of employees and you have this version of the application that you distribute to the different employees and you get feedback from the employees before you go to production. So this is beta testing, let it be from internally inside the company, or if you have an outsourced beta program. And then when you go to production, you have given your users the ability to report feedback and report any bugs or problems for you to make sure that you're staying on top of those issues. Second thing is the user feedback. And when we talk about user feedback, bug reporting is still a part. In-app surveys is another part. The first one is a proactive behavior from the users where they are seeing an issue and they decide that they want to send this feedback to the development team or to the engineering team, product team, customer support. And the second one is somehow they get reactive to answer the questions that you ask them. So you try to collect as much valuable insights as possible. You try to ask them custom questions. You try to get Net Promoter Score ratings. You try to get App Store ratings. You try to help them voice out whatever concerns that they have. And you collect feedback in return on the features that you're building and on everything that you're basically getting out to production. Third one is stability. And this is very critical. We learned that if an application is unstable, and the definition of unstable application here is that it's an application that has crash-free sessions below 99%. So if your crash-free sessions is 98 point-ish, that means you're an unstable application. And definitely as you scale, this number might change, but definitely 80% of your users at this case will use the application up to 3 times max and then uninstall it. That's why investing in your crash reporting solution is a no-brainer. Users uninstall the application, users churn, and users will actually find another bank to start working with if the application is unstable. Fourth pillar is the monitoring. And what we mean by monitoring here is to stay proactive on monitoring 100% of the metrics that matter. We will definitely come deeper into this within the coming few slides. But when we speak about monitoring, we're not referring to crashes. We're referring to everything that's happening that's not a crash. A crash is the worst case scenario. The crash makes the application terminates. Users are not using the application anymore, but actually monitoring what's happening internally from waiting time, how much time do users wait for a specific transaction to get completed, for specific network calls and APIs to get executed, for the waiting time of the app launch, hot or cold, for any screen loading time, for any UI hangs, if there are any frames that are dropping, and so on and so forth. So there's a huge spectrum of metrics that we advise companies actually to start taking care of. And when it comes to banks, this is a no-brainer. You'll have to keep monitoring all of those metrics as you go. Fifth one is security. We've been working with a lot of banks. GDPR compliance is a no-brainer, definitely. Ensuring the data is secure, encrypted in transit and at rest. Ensuring the data is physically kept somewhere that works with your compliance regulations. Banks' processes are super bureaucratic. It's not easy to get through. And one of the things that we've actually started helping banks do is we started provisioning single tenants to host their data on. So if you're a bank inside the EU, then you go into a single tenant inside the EU, and so on and so forth, depending on the region that you're at, depending on the compliance and regulations that you have inside your bank, the central bank of the country that you're in. You need to make sure that the company or the provider that you're working with is SOC 2 compliant. You need to ensure that the vendor you're working with has continuous penetration tests and you have access to those pen tests. And this is the fifth thing that we've been focusing on. Sixth thing, and it's the last one, is development. And what we mean by development is the continuous releases and releases cadence. App Store ratings definitely are correlated with the releases frequency. Top finance apps release every 11 days on average and rank higher than the slower moving competitors. And definitely the less you release, the less people will download the application and stick to it, and the less you rank on the stores. One of the things that we started talking to banks about recently is that banks need to be more agile. Older financial institutions and apps release updates roughly half as often as new fintechs. Banks will need and will have to adapt to the new market trends and will have to adopt to new tools to keep up with the new releases, with changing the technology stack, processes, becoming more agile, becoming more efficient, and so on and so forth. Last thing about this is one of the key to release frequencies is to make sure that you're having feature flags to test different variations of the app and to choose kind of which track you'll move forward with. Extensive testing, full visibility of application performance, and frequent incremental changes and optimization as you grow. When we try to define some of the success metrics, we will be dividing this into two buckets. The first one is going to be the success metrics for product teams, and the second one is going to be the success metrics for engineering teams. And going for the first one, success metrics for product teams, you will need to receive in-app feedback from users for any issues that they encounter. Stay on top of that to make sure that there's a communication channel that's established. You need to engage with your users in a two-way conversation and increase their loyalty. Segment your users by defining user attributes and understanding different segments behavior. This is very important. And when we started working with banks, we started seeing they're having multiple segments, and those segments behave differently. They have different needs, different demands, and they do different things inside the application. So we started helping those companies have, or those banks have different segments set inside the app. If this is segment X, then we start filtering the reports. If this is segment Y, we start filtering the reports. If you have a user research department inside your bank, it's going to be super important for you and valuable to understand how those different segments are using the product. Shipping new features while ensuring a top-notch user experience and app performance, definitely. Last but not least, to send NPS, app rating surveys, and custom surveys to stay close to the users and monitor how loyal they are, how the App Store ratings are going to get affected, and how the features that you're releasing are making sense. When it comes to engineering, it's kind of different, kind of more complex. So one of the things that we're trying to introduce and to help the banks adopt right now is the concept of aligning the whole engineering team under one KPI. And it's not the crash-free sessions, it's the Aptic score instead. Aptic score is application performance index. It's an industry open standard for measuring the performance of any software application in computing. The idea behind it is to have a universal score that represents the overall user experience within the application. So the Aptic score can be used to describe the overall app health, or it can be used to describe individual events or traces. What we do here is that we define a number from 0 to 1. The closer you get to 1, definitely the better. And this encapsulates multiple key metrics. As you can see in the screenshot, there are crashes, app launch, network calls, screen loading time, and UI hangs. So instead of only defining crash-free sessions as the only one, if you're scoring 99% crash-free sessions, but actually users are getting frustrated sessions due to very slow network calls, or maybe the application takes a lot of time to launch from a cold app launch or a hot app launch. So those are a combination of frustrating experiences that are not measured just because the engineering teams are only looking at the crash-free sessions, but they're not looking at the Aptic score, which is a more comprehensive one. So this is one of the very important success metrics that we've been pushing banks, companies to start relying on. Second one is debugging to cut down your resolution time. Instead of putting like manual breadcrumbs inside your code, you need to make sure that you're having the real steps that the user took inside the app to start reproducing. Those logs could be console logs, could be user events, could be network calls, whether there's a no response from this call, or whether it's a 200 OK, it's a 404, it's a 500, or whatever. So this is one of the things that you need to ensure that you're having the right debugging capabilities for. And then monitoring, prioritization, alerting. And actually, this is very interesting because we've been working on 4 verticals right now, and I've been advising banks to look into 4 verticals. The first vertical is the debugging, second is monitoring, third is alerting, and fourth is prioritization. When it comes to monitoring, it is just that you need to have a defined client-side performance monitoring for your application. And this includes measuring the application performance, app launch, network calls, screen loading time, UI hangs, custom traces. Prioritization to prioritize issues that need attention with advanced filtering. Which crashes do you need to look at first? Which API calls you need to take a look at first? Which screens that look to be really having a lot of problems from a UI standpoint that you need to look at? So prioritization saves a lot of time. Prioritization aligns the engineering managers, engineering directors, and everyone inside the organization on what should be done first. And finally, alerting, which is super interesting as the bank scales and as the engineering departments scale, and as you start having a huge engineering team divided into squads, and each squad is responsible on a part of the code. So if you're dividing your app into modules, and each module will have a team responsible on it, you need to make sure that there's a code ownership concept implemented across those squads, and whoever is responsible on a part of that code gets notified whenever a crash happens or whenever the performance of a specific module is suffering. So those are kind of the engineering KPIs that we wanted to touch base on. One of the very interesting things that we have done is to measure the success of the banks that we've worked with. And one of the banks that we worked with is a European bank. We cannot definitely say its name, but we got the rating of this bank from 3.6 to 4.5 on Google Play Store and on App Store actually in 6 months. What happened here is that the original need was they initially came to us with a problem of low store ratings. So they're like, hey, we're having 3.6 low store rating and the competition is doing better than us. We need to reach a 4.8 or a 4.9 star rating. So we need to purchase the Instabug surveys product. We started doing some studies on their application. We started doing analysis. We started asking them on the crash-free sessions, monitoring options, what are the key metrics that they're aligned on? And we found there's a huge problem regarding the quality. So we kind of wanted to take a step back instead of just saying, hey, you can use surveys and you can use app rating surveys to push users to give you a 5 out of 5 rating on the store. We wanted to take a step back and understand how the application quality is handled internally inside the bank. And the conclusion was we cannot fix the App Store rating problems unless we fix the quality of the app. We started speaking with the engineering team instead of speaking to the product team, and we started having those conversations more often. And then right now they're still on a 4.5, using us for performance and stability aspect, as well as the product aspect and user feedback. Takeaways: improving store rating is a complete work process of enhancing the app quality, not only focusing on the surveys. App rating surveys will help, but ensuring the stability of the app definitely is key. Aligning all the digital department on one single KPI was a game changer, kind of to make sure that they're seeing the AppDex score and they're seeing the App Store ratings. Julie, back to you. I think I'm done with the slides. If there are any questions, I'm happy to take them.
Thank you so much, Ziad. I really appreciate it. Just a reminder, if you do have any questions, please just put them in the Q&A at the bottom of your screen. We have a couple that have come in. First one is, what should banks focus on first when looking to improve their mobile app?
Yeah, that's a good question. Actually, the general rule is definitely, I would say, crashes, to make sure that the application is stable. So the stability is the #1 metric that every single bank need to look at. An unstable application will not take you anywhere. So the first thing is the crashes. And then I would say the network calls and the network performance, since a lot of transactions and a lot of network requests take place from inside the application. So it's super important for the network calls to be well monitored and well debugged and on top of users' expectations.
Great, thank you. The next question is, can you touch on how Instabug ensures security of all its data?
Yeah, sure. Yeah, first of all, Instabug is GDPR compliant. We've had a lot of banks using us. What we try to do is as well to separate the data for the banks physically from any other data that we have. So as mentioned, if you're a bank inside the EU, then we go into a single tenant for you. We provide quarterly penetration test reports to make sure that you have access to the logs if there are any audits that happen. We're SOC 2 compliant, and we renew our SOC 2 report definitely as frequent as possible. So we're taking all the security measurements internally to make sure that any banks, telecommunication companies, insurance companies, governmental institutes, or any sensitive information happen to take place is secured. Second thing is that we actually provide a lot of coaching to the teams to make sure that they're using Instabug's API in the correct manner to not collect any personal identifiable information and to make sure that the data coming from the users' applications requests without any sensitive information regarding credit cards or any banking specific metrics.
Perfect. Well, those were the only questions that came in. I just wanted to thank everyone for joining us today. As a reminder, a recording of this will be sent out to all attendees. We hope you have a good rest of the day, and thank you to our presenter, Ziad.
Thanks, Julie. Thanks, everyone.
Thank you.